People say patience is the most important quality in a long-term investor. And they are not wrong. But patience alone is not enough. Holding on without any real foundation is not patience. It is just waiting with nothing to stand on. The thing that actually makes long-term investing possible is studying history, probability, and statistics. There is a common belief that investing knowledge only comes from personal experience, that you have to go through the ups and downs yourself before you can truly understand the market. Especially when it comes to money, people tend to think that age and lived experience are the only real teachers. If you are young or just starting out, the assumption is that you have nothing valuable to contribute and nothing useful to draw from. But in investing, I think that assumption is wrong. Some people treat early investment losses as tuition, as if losing money is simply the cost of learning how to invest. But it does not have to be that way. The U.S. stock market has over 100 years of history. Within that history, there have been countless crises and recoveries, and countless researchers and investors who have studied those patterns and turned them into data. That history is already your teacher. Think about it this way. A medical student does not need to personally get sick to become a doctor. They study thousands of years of accumulated medical history and research. Investing is no different. You do not need to personally live through a crash to understand one. You just need to study the crashes that already happened. But most people focus on the present. They pay attention to what is happening in the market right now, how today's news might move prices, and where they think the market is heading next. They spend their energy trying to predict the future. Here is the problem. Nobody can accurately predict the market. Not the best analysts on Wall Street. Not Nobel Prize-winning economists. Not the most famous investors in the world. So why do we keep trying to guess what tomorrow's price will be? Prediction is gambling. Decision-making based on historical probability is strategy. Those two things produce very different results over time. Let me tell you about something I experienced firsthand. In March 2020, when COVID hit and the U.S. stock market dropped nearly 30% in a single month, the news was nothing but fear. People were panic selling. There was almost no optimism anywhere in the market. I used every dollar of available cash I had to buy. Not because I was brave. Because I had done my homework. I had studied how markets historically respond to pandemics. The Spanish flu in 1918, SARS in 2003, the swine flu in 2009. Every single time, the market went through a period of extreme fear, and every single time, it eventually recovered. The pattern was clear. And based on that historical pattern, the probability told me what to do. That was not optimism. That was a decision grounded in history. Most people spend years studying to get a good job. They earn certifications, practice for interviews, and build professional skills. But when it comes to understanding how to protect and grow the money they earn, the studying stops. The present is history repeating itself. Not perfectly, but with patterns that are striking in how consistent they are. Markets have always eventually recovered from fear. Markets have always eventually corrected after euphoria. The person who knows those patterns and the person who does not will respond to the same moment in completely different ways. It does not matter how young you are. It does not matter how little investing experience you have. What matters is whether you have studied the history. 100 years of stock market history has already taught us everything we need to know. Long-term investing is not about hope or wishful thinking. It is about learning from history, understanding probability, and making decisions that do not get shaken by the noise of the moment. That is the foundation. Everything else is built on top of it. Now I want to hear from you. Think back to a moment when the market was at its most frightening, whether it was COVID, the 2022 crash, or any other downturn you have lived through. What did you do? Did you hold, did you sell, or did you buy more? And looking back now, do you think you made the right call? Share your story in the comments. Your experience might be exactly what someone else in this community needs to hear right now. If this video was helpful, please subscribe and hit the like button. I want to be part of your journey toward a successful retirement. When the market gets hard and doubt starts to creep in, I want to be the voice that helps you stay grounded. See you in the next one.